Hi, everybody. Good morning, Paul. How are my trading warrior brothers and sisters doing today? Hello, Rena. So, day before the NFP, getting some alerts. So, I think this is a book squaring day, or at least into tomorrow. The big feature coming in today is oil. Okay. Cable, the weakness. EG talked about longs from 85.70 this week. EG still looks like it's pushing up. So that actually makes the pound your preferred short. So euro stronger. Aussie's held up better than the euro. It has not made a new low. It's still a higher low. And gold has had a 2-day rally. But you could throw your charts away tomorrow for, at least 5 to 15 minutes. We're now in the 4,300 zone. Hello, Karan. Okay. Hi, Sinatra. And, with what the yen has done, that's another feature. It's almost like you have a breakout here of a long-term formation. Just take a look at this, and, this kind of implies higher yields, doesn't it? Hugo, how are you? So, I mean, this is a weekly chart, and this is a weekly trend line. Let's even look at a monthly. Normally I'd be looking to fade something like this, but we're trying to come out of a big formation here. And I think 113 is at least doable. And some of the long-term bears and this should not be positive for the metals. It's actually interesting that the golds rallied yesterday with the yen trying to break out and the yen breaking out. This looks pretty positive to me. So maybe yields are going to make that move to the upside. Okay. So that's a monthly. It's too long term. But it's trying to dig in at a higher low here. I'm conflicted between the two scenarios of a lower low, for a 1, 2, 3 down here, which would end up under 130, 127 or so. We get back over 155, it's going to look pretty good. This moving average almost looks like a resistance line. Look how it tagged it here after the Fed. So stronger yen, weaker yen, but stronger US dollar yen and stronger crude. And they're bringing the market back. We're going to try for that fib extension at 43.14, and then I think the next one's up around 43.40, 43.60 in that range. And with all that happening, the VIX is still above 15. So, you look at the VIX, we're at new all-time highs, and we're not at new lows in the VIX. So we'll see. We're in that zone now. The month has come and gone. We're in July. In fact, Steve Volge looks for potential reversals at the beginning of the month. I'm more of a mid-month, mid-week, mid-year guy, and it is mid-year too. We're halfway through the year, so we'll see. Not sure if it's all going to turn on the NFP tomorrow, but we're still diverging here on the daily and the S&Ps. In fact, if we only go to that first fib, we're still diverging on the 4-hour. Hello, Gorkum, Monica, the 2-hour, and let's go the shortest TF I look at. So we confirmed on the 15-minute up here. Right now, this looks like it might be just a failing rally, but keep powder dry to react to things tomorrow. I actually think there might be a chance to the dollar's coming off pretty good right here. It didn't quite get to the 92.95 level or 93.5. So we'll see what happens tomorrow after the number. I'm flat right here, except for some long-term option positions. So Blake, good morning to you. How are you? I know,
Good morning.
I know that you've put out some videos about trading before big numbers and advising traders not to try and guess what the reaction would be.
Yeah, actually, you know what? That's a gosh dang it. Let me find it for you guys really quick. Just give me 1 second. Let's go over to just give me a second, Dale, and I'm glad you brought that up.
Yeah, it's like what? It's binary. It's red or black trading that way. You may as well trade, may as well go play roulette.
Yeah.
Oh, and nice call on Bitcoin, Blake made. It's a pattern in play.
You know what? That was a terrible call. It was a terrible call. Yeah, and I'll tell you
why
here in a second.
All right.
It's horrible. I got wiggled out like a wuss.
Yeah, you're trying to get used to the way a new asset class trades. It's different.
I'm sorry. This damn thing was. I hate ads, YouTube ads. And I'm one of those guys that I always have friends that are like, you don't pay for YouTube. It's like I pay for so many things, personally, and like even my kids are like, they go to YouTube ad free. It's like I don't even care. But then it's like times like this when I actually want to show you something. It's driving me bananas. So there's a where I'm trying to best time. Oh, here we go. Let me get you guys here's the link, and then I'll put it in the chat. If you guys haven't
nice production,
huh?
It's a very nice production too.
Oh, thanks. No, I'm trying to find my chat box. Just give me 1 second. I'm gonna throw it in the chat so you guys can watch it at your leisure. So just there it is. Okay, here we go. I'm gonna put the link in there, and it goes to everybody, and then you guys can watch it. There you go. You can watch it at your leisure. Did it not work? There it is. Okay. All right. Now I'm done. So, yeah, I did post that, just trading economic events and kind of tomorrow I'm going to be, I won't be here, just to let you guys know. I won't be here for the actual jobs data. I'm doing a trading battle with the guy from Aspen Trading, Dave from Aspen Trading. So I'm going to be doing that, but I'll tell you it's a really easy setup going into tomorrow. First and foremost, let's talk about like where the dollar's at. So, the dollar surprisingly strengthened right into resistance. I wasn't too surprised that the dollar is strengthening the way it's strengthening. We've talked about how the market has been very much positioned in a bearish sense, and I think the move as the dollar index came back down towards 89.50 here, and the euro was trading back up towards 122. I think the market actually got a little levered up, short dollars, and expected that this was going to finally be a breakout, and obviously the dollar's turned stronger and pushed us right back to support. Now, notice that every currency pair ahead of the jobs report is probing pretty key support or resistance. With the dollar pairs, you got the sterling that pushed against these lows, the 37.85 level, and if you're a ForexAnalytix subscriber, you got an update, an hour ago that just says, hey, you got to be careful, false breakdown here. Because, we pushed 20, 30 pips below those lows, just enough to trigger some stops. And now we're bouncing. Euro dollar, same thing, triggered just below those lows. And, we're bouncing right into what I feel is going to be resistance, above the 119 level. But I think there's more dollar weakness to come here. So just keep that in mind. I think the dollar can weaken. Now, you're probably looking at equities saying, well, how about if we reverse here in equities, at this, 4,300 level? Yeah, I think the dollar could eventually strengthen, but I don't think that, anybody right now is going to step in front of the equity market train at this point, not without knowing what the data is tomorrow. What's going to be really important about tomorrow, and I just want to make sure I'm very clear here. The stock market needs to see weak data. Dollar bulls need to see strong data. I don't think the two will coexist. So let me explain to you guys what I mean by that. If we have strong data, so let's say we create a million jobs, and the whisper number is somewhere around 1 million, just so you guys know. If
1 million,
1 million jobs,
I
see that people.
They're whispering about it. Okay.
It is. Whispering.
They're afraid to say it out loud.
1 million dead people. If we get 1 million jobs created, and let's say unemployment drops by 0.1% more than the market expects, it's a good piece of data. Dollar's going to strengthen. Stocks are actually going to get probably hit because people are going to start thinking, Jackson Hole, end of August, the Fed's going to start, really preparing the market for taper talk. Okay. But if we get a weak piece of data, or even in line, I would venture to guess, even if we only create 700,000 jobs tomorrow, somewhere in that neighborhood. Sorry, guys, I didn't mean to yawn on you, but let's say like average hourly earnings coming in line at 0.4%, and we create 700,000 jobs, or 650 or 750, somewhere in that neighborhood. I think the stock market's going to continue to rally, and the dollar will actually pare back these gains. And I look at technically what the dollar index is doing, and you guys already know this week. I've been a dollar bull. We've had a nice run this week. We were down here at 91.80. We broke 91.90, and it's the bull flag's in play. I don't think that this is not happening. I still think that we're moving higher here. But if the dollar, or excuse me, if the data is strong, or let me rephrase that. If the dollar is weaker, if the data is weaker tomorrow, the dollar will be weaker and stocks will be stronger. And what the dollar will probably end up doing is over the next, week or week and a half, we're going to start building some sort of flag pattern, pennant, what I mean? Bullish wedge, something that will eventually crack us higher. But I wouldn't write off the dollar right now. I think that after 2 months of weak employment data, we get about a bounce back. I don't think the whisper numbers are too far off tomorrow. That doesn't mean that we're gonna post some really good data. But if the data is good, which I'm assuming it is, then the dollar is at risk of really breaking out. And I think we might see new highs in the dollar index, going into the next few weeks if the data is strong tomorrow. So now, one of the things that you might want to think about is, as the dollar comes down today, if you're in the camp of, I want to find, I actually want to be, long dollars going into tomorrow, then you got to find a point to be long the dollar index. And I think the dollar index is approaching pretty key support here. You can see trend line supports coming into play. you might actually get a little bit further pullback, maybe to like a 38% retracement, which would be right here at 92.15. So I think if you are really looking to pick up the dollar ahead of tomorrow, because you are in the camp that there is going to be strong data. You think that stocks are probably going to, take it in the chin with some strong data, and the dollars looks like it's really going to break out. Well, be a buyer down here. There's a 38% retracement. There's some resistance, previous resistance that should act as current support. This trend line right here, you breach this trend line. What's going to happen? You're going to get some selling stepping in. Let the sellers come in. Try to pick it up down here. 92.15, maybe 92.10, somewhere in the same area. This is probably going to be your better positioning area for dollar longs. So what does that mean for the euro? Well, probably means that you'd be shorting the euro above 119. Somewhere around the 119.15 level, 119.20, somewhere in this neighborhood. You're probably going to be looking for, euro dollar shorts, or you want to pick up the dollar Canadian. By the way, I don't know if you saw this, Dale. Crude is ripping.
Yeah, I did. OPEC.
Yeah, we are expecting them to cut. Correct?
I think it's 500,000 barrels or something like that. Basically, I think what is there have been whispers and some kind of sources saying, well, what's going to happen, and I think it's less than the market was expecting originally. That's why we're rallying, even though they're going to announce a cut. An increase in supply.
They see dead people.
We see dead people. Yeah,
they see dead people too. Okay, all right, just checking. Thank you, Stelios. Appreciate it. So here's crude, and you can see it rallying and pushing above the highs. So one of the reasons why the dollar Canadian is so weak is that, the Canadian currency is strong, and the dollar Canadian, slipped today. Same with the U.S. dollar and Norwegian krona, is you got crude oil breaking higher. Now, crude target, maximum triangle target comes in just about 77.60. So we're above the 161% extension. Relative strength remains divergent. So I think we can push right up to those highs. We might actually spike up to those highs today. And if that happens, then you start looking at, okay, well, dollar Canadian has been really, very strong over the course of the last couple of weeks. Pullbacks have been very minor. You might get the dollar Canadian pushing back down here towards 123.30, and then you get a bounce. And what I'm hoping for is an eventually break above this trend line that comes in just above 124. And we squeeze past this, and you're going to have a massive bull flag on your hands.
130, 132, Blake.
Yeah, well, I'm not looking at that just yet. Okay. I think this move
if we break out
7. Yeah, I mean, yeah. We have a lot of work to do for the dollar Canadian, but you got to imagine also, a lot of people were thinking, oh, big double top, blah, 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 blah. Then we got this false breakdown below these lows that goosed the shorts, the last month, if you will, goosed them really good. And then pullbacks have been very minor. I mean, we haven't, we've been barely able to pull back a 38 or a 50% retracement. And we held like breakout points and all sorts of things. So, and this is in the face of strong crude oil. Imagine if crude, actually pushes back down towards, let's say 68, we see a, let's say a 10% move lower in crude from here after the move that we've seen this year. I don't think that's really asking for a whole lot. So, we start to see crude come off, you see stocks come off a little bit. Yeah. I mean, dollar Canadian could be very easily at the 200-day moving average and higher soon. So, if you guys are looking to position yourselves on the long side, and remember, we don't have Canadian employment data this month. It'll be this week, it'll be next Friday. So, there you go. I'm done. Stick forward to me. I'm finished. I'm just kidding. I want to welcome Steve and Stelios here and see if they have anything that's going on. What's up, Stel? I know you're probably monitoring what's happening in Europe overnight. What's going on over there?
Well, one interesting thing is the Riksbank. So the Central Bank of Sweden, they kept rates unchanged, but they're tapering. So I know they're not a currency that we're following, that we actually cover on ForexAnalytix, but we do follow the Swedish krona. It's usually or often a canary in the coal mine. And so they're tapering their asset purchases. Okay, Steve said he's going to be here in 3 minutes. So this follows from Bank of Canada, who also tapered. The Fed might be thinking about tapering. Well, there's other central banks who are doing it already.
And that, it's interesting that hasn't strengthened the SEK today. I mean, the crown is actually weaker. I mean, I know it's off of its highs, or let's say it's off of its lows. The dollar Swedish krona is off of its highs, but it's still, based on what you're saying, are you surprised that it's not stronger than it is right now?
I am, but I guess this goes with the whole thing about dollar strength in general. These currencies, maybe at this time are ignoring other things. I don't know, but the dollar is strong overall. So I am a little bit surprised, but until tomorrow's payrolls and until the market digests that, I'm not looking at any price action really. I think it's all going to be noise.
Got it.
Elsewhere, we had some PMIs today. So manufacturing PMI, Germany 65.1, slightly higher than expected. UK 64-ish, slightly lower than expected, but still, very high readings. And this is in line with the general recovery of all these indicators after the terrible time that they had last year. But really, it's oil, which is just a monster. I mean, I'm looking at price action, and it's crazy. You try to short this, you're going to get burnt every time. I think we are probably getting now close to levels where I'm definitely going to be looking. I don't know. I haven't decided the levels yet, but I'm going to start looking, probably accumulating some shorts. But the way this is going, I'm not standing in the way yet.
Yeah, and what's really interesting about crude, I have to imagine, and I know I've said this probably for the last month or so, at some point it's got to really weigh on demand in this environment. But I guess the flip side is, I guess if you look at here in the United States, maybe I'm not sure where if it's going to be the same if you look in different parts of the world, but here in the United States, balance sheets, household balance sheets are flush with cash because of all the stimulus. So maybe it's not so much demand destruction when you have, energy costs as high as they are, but I don't know. I mean, crude has been really strong. And technically it looks like it can go a little higher, but it does look at risk of a pullback soon.
Mark yesterday said the last 6 times, and crude just did it again, the crude doubled in price. We had an economic slowdown 6 months afterwards. So that's 6 times in a row.
That was from Mark Chandler yesterday. Yeah. If you guys missed that interview that Dale did yesterday, what a really great interview. You know what else is interesting, Dale?
I asked him about UFOs too, Blake.
You did? Dang it. You probably asked about the unicorn star signals in the sky.
Area 51.
Yeah.
That's anyway. Awesome. Now, but as far as crude goes, Bill over at Blue Line Futures, I was talking to him. I was doing an interview with him last week about Bitcoin and gold. If you guys missed that, but more importantly, is like a private conversation with him. He's like, I see crude going back to 100. I'm just trying to find a dip to buy. He's like, I really would love to pick it up back in the 60s. He goes, I see it going over 100. And he runs a commodity brokerage firm and he trades crude oil pretty actively. So I thought that was kind of interesting. It's something that we were going to find an opportune time to do an interview when he sees a pullback that's a decent pullback in crude. He wanted to do a video on that, because that's kind of his thought, and he would tell you his whole process and everything. Anyway, I found that kind of interesting. So
I'll tell you what, Blake, if we see WTI break the highs of 2018, which is just under 77, I think, we are going to head to 100. I mean, that's going to be, it's going to fly. I think here is where it needs to reverse and find some kind of reaction. But, you know, I think it's a huge level we're coming up to.
Ain't no lie. I mean, and it's hard, you know, it's when I see charts like this, it's hard, really difficult to start drawing like Fibonacci's to see retracement levels and everything else. And the reason why that is because if you guys don't recall last year when crude went negative, right? I mean, it was, you know, because of the whole storage issue. Remember they had tankers all over the place. I mean, crude, if I recall correctly, it was negative $50 on the day at some point, or 40.
46, I think, was the low, like minus 46, something like that.
Was that it? You know, it's funny. I think I have. Let me. I can search. I might have. I think I saved. Well, I saved it when we went negative. So, crude.
We had a lot of guests that called for 75. Anas called for 75. You know, he's
hey, you don't need guests. I've said it's going to 100 ages ago, but not yet.
You're my guest too. You're always welcome in my house, and so you're a permanent guest in my book, buddy.
We're going to 100, but we need to move lower first.
Oh, you are so sure?
Yeah, I am. Long time ago. I'm certain we're going to triple digits.
All right. Well, that's gonna be great for all of you gas guzzling American people. So Steve, I know you're just getting in front of your computer. You got just a few minutes. You have any thoughts ahead of the non-farm payroll?
Not really. Technically speaking, I would like to see the NFPs push dollar higher one last time, and I'm then going to, you know, if we see another leg higher in the dollar, I'm going to start slowly looking for levels to be short the dollar in the weeks ahead.
That'd be interesting, because if you look at the dollar index and you look at the, I've long thought that this wedge is forming, but I don't know if I'd really want to be short the dollar index if we broke this wedge, because that's gonna squeeze the hell out of people. We'll hit new 2000 probably 21 highs after that. But I see what you mean. If we hit a new trend high, and let's say tomorrow we spike up towards 92.80. and we can stall up here, I could see that. But I think I'd be worried if we really broke out. Now, one of the things you didn't hear me say, and I just want to make sure I'm very clear here going into tomorrow's jobs report. If this is a strong jobs report, and we do create, let's just say 1 million jobs, let's say average hourly income drops to, I think expectations are 4.8, 4.7%. Let's just say we drop to 4.2. Let me go ahead and double check that number. The market's looking for average hourly earnings. 0.4%. I'm sorry. I say 0.484. Anyway, 0.4% is what the market's looking for. Let's say it comes in at 0.3%, or 0.5%. It comes in better than had expected, and the jobs report comes in creating, you know, let's say 1 million jobs. I don't know if I'd want to be short the dollar, because then you're going to start getting people thinking about Jackson Hole, which is at the end of next month. You know, we might get a continued dollar move going into the end of summer. That would be my thoughts. So, and after,
I'm not dismissing the possibility of seeing the dollar rebound, you know, extend somewhat. And as you said, it is summer, and we know that summer, definitely can help, keep things in the previous motion, right? Because things might not we got numbers.
Jobless claims,
initial jobless claims,
yeah,
364 versus 390 expected, and continuous jobless claims though worse than expected, for 3.47 versus 3.38.
It's a non-event. Carry on.
Yeah, basically yes.
Well, and by the way, guys, we were just a little bit earlier, we were talking about technicals and the dollar index. The dollar index, this is looks like intraday. This is probably going to be pretty key support. So just keep in mind that if we dip towards this 38% retracement down at 92.15, it's probably going to offer those of you that want to have some dollar exposure ahead of tomorrow, probably a decent level to do so. All right. Thanks, Steve and Stelios. Dale, I know you have your interview. I just want to thank everybody for coming in. Remember, watch these. These are trading tips with ForexAnalytix videos. This is the one, 6 tips to know before trading economic events. I'll throw it back in our chat box so you guys, in case you missed it, they're free. They're videos that I put together with the team. And you should watch them. They're just little trading tips. I'm actually going to be filming one today. I've got some, just little tips on things that we've picked up along the way. But I just want to say, if you guys have not visited our videos or our webinar sponsor, for the F.A.C.E webinars, Pepperstone Securities. If you want to learn how to be part of the ForexAnalytix family for free for a few months, up to 4 months, open an account right here through this link. If you're outside the US and Canada, if you're inside the US and Canada, visit Forest Park FX. They'll help you get cashback rebates on your trading, which is always nice. So make sure you contact them. They're on our ForexAnalytix sponsored page. So Dale, have a great interview. Steve, Stelios, thank you very much. I'll catch you guys.
Thank you,
I won't be here tomorrow for the jobs report. Steve and Stelios will take care of you with Dale, but I'll see you guys, on the morning edge. For those of you that ForexAnalytix subscribers, I'll see you in just about 45 minutes.
Have a great weekend, Blake.
Thanks, you too, Dale.
Have a good trip. Get out of the heat, huh?
All right, yeah.
Okay.
To be honest, Blake, we have Arizona type of heat today here.
You don't
really? It's 100 degrees, 110.
It's 106 at the moment.
Oh my goodness, yeah. All right.
Wow, that is almost Arizona heat. And I've been in Greece. I've been in Greece when it's about 100 degrees, and it's not pleasant.
Yeah. The good thing is that we only get like 2-3 heat waves like that usually last, between like 2-3 days and maximum like 5-6 days during the summer. So it's not, that many days.
Go jump.
Well, Stelios gets to walk around without his shirt on because he's benching 315 now. So.
Oh yeah.
Right, buddy.
Exactly.
All right. So Michelle, welcome back to F.A.C.E. Thank you, Steve, Stel, Blake.
Thank you.
Mish, great. It's going to be great to hear you. It's been a while.
Yes, I can. Yes, you can hear me, but I'm trying to. Can you hear me?
Yeah, I can hear you. I can see you. You're
okay.
On camera.
Oh, great. Yeah,
right,
I might as well, right?
Yeah, nice setup there. Are these your new digs here?
Yes. Yeah, if I turn the screen, you can see we have a whole long trading room going on there.
Wow,
and
nice. Yeah.
This is sort of my station, and we love it. We're downtown Santa Fe, right in the heart of things. We actually moved when everybody else was working at home. That's when we decided to take an office, because we had been working from home for a long time, and happy to say market gauge grew. So we needed more space.
Nice. Okay. Yeah. Well, welcome back to F.A.C.E. And I'm not sure if you want to share your screen, or if not, I could move around to different markets.
I actually,
the green box.
Screen. Yeah. I kind of put up the, here we go.
You can talk about the family.
Yeah, we always like to start there because it tells, every picture tells a story, right?
Yes.
So, well, first of all, Dale, hi. How are you?
I'm doing okay, Mish.
Okay.
We're into these summer doldrums, but there is some excitement. And I know one of your major themes that you were real right about was the commodity theme starting, gosh, I don't know, a couple years ago when we were just coming out of a lot of these bases. And recently we've had some corrections just based upon Powell's jawboning. Really hasn't
Exactly.
done anything.
It was talk, not that the Fed talked, but they didn't walk, because you can see the bond buying's robust. Junk bonds, if you look there, they actually cleared an 80-month moving average for the first time in, like, I don't know, years, like 2012, 2013. And then you look at the yields, obviously, and they're still low. The TLTs are up, which is suspect, because that makes you wonder why people are buying bonds if everything is so roseate.
Right.
And even though the Fed is still jawboning, and as of yesterday, we still had some of them talk about tapering sooner than what we expect, they're going to be left with this ultimate dilemma. And that's what we're going to look at here in the Modern Family, because that's why I'm saying it tells a story right here. And I think the Fed is not as out of touch as people think. I think they're just more, really, they're not sure which way they should go at this point. And that's not to say they don't know what they're doing. I just think they're in a precarious spot. So if we look at the charts here and we start with,
they can't reverse now and say, we're not even, they just reverse from we're not even thinking about thinking to what Paul said right last time. So it probably is going to be a cloud hanging over the market until they do something. Maybe it'll be a buy the rumor, sell the fact when the Fed finally does do something.
Well, right. Okay. So with the Fed actually comes in and does something to control inflation. Well, first of all, there's so many things to talk about, so I don't want to sound all scattered. Okay. So let's just go back in history a little bit. And this is what you and I talked about a year ago or more. And of course, I also was talking about stagflation.
Yes.
And I still think that's where we're heading, not right now, but sometimes what I can do is see really well into the future, but that doesn't necessarily mean anything about market timing. It's just the inevitability of something. But obviously, it could happen in 6 months or maybe even a year. I do know one thing. We are certainly in a commodity inflation cycle. There's no doubt. And that doesn't mean if you get a correction, inflation cycle's over. What people don't really understand, since there hasn't really been focus on commodities in, my goodness,
20 years.
Long time. Yeah. Is that commodities do that. They go parabolic, and then they have these huge corrections, and then they go up again, and they have huge corrections, and up and down and up and down. And it's really takes some kind of a shift in policy to really knock it down and take the wind out of the sails. And here's the perfect example. So if we go back to the mid 1970s, this is what keeps, I've been looking at this now for, again, so long. But in the mid 1970s, you had, of course, reasons. You had the oil embargo, you had the Israeli 6-day war, and oil prices went crazy. And at the same time, sugar prices went crazy for a couple of reasons. One is sugar obviously is tied to ethanol. Right. And secondly is that in rough times, this has been statistically proven, rough times and in times where things are expensive, people turn to junk food, sugary foods. And of course, sugar is insidious anyway, because it's in everything. But then they really go to it more so, as particularly lower socioeconomic groups. So there's two plays here in sugar. And this is in spite of all of the warnings about how sugar is so terrible for you, yada, yada, yada. Okay. So then what happens? Gold and silver at that time didn't really react very much, nor did any of the grains. But then as we got into the late 70s, as we were turning to the next decade in 1980, we know what happened. Hyperinflation, gold went crazy, silver went crazy, a lot of the grains went crazy. And actually sugar rallied again and had a huge correction, by the way. It rallied again, but not nearly as high as it went back in the mid 70s, because now gold and silver were all the rage.
Was
And then-
the win buttons, Michelle, whip inflation now in the mid or late 70s? I can't recall. Remember that?
Say the beginning of the
People were wearing buttons that said whip inflation now in the 70s.
Yes.
You
Oh
remember
my
that?
God. Well, I'm going to say no. I don't remember that at all.
I don't remember anything. So,
Right,
anyway,
did they have
old
right,
timers.
well, exactly. Oh, was it on Sesame Street? Because that's what I was watching.
Yeah.
Right.
Yeah.
Anyway.
But I mean, that was it. Whip inflation now, it'll be something if that was President Ford, Ziggy's saying.
Exactly. Okay, exactly. So we know what happened. I mean, Carter was still president at this point, but the Fed started to raise rates. But what really killed the silver and gold market was the exchange. The exchange came in and not allowed you to buy either metal anymore. You could only sell. And then, of course, you had the bunker hunt problem, and that was the end of that. And it's languished for all these years. And what's so interesting to me, before I get into this, because I think this is, as a student of the market, most people aren't aware of this, and I even tweeted it out this morning. In 1980, the ratio between gold and the Dow was roughly 1-to-1 in terms of price. So here we are 40 years later, and now the Dow is trading at 20 times the value of gold. So we're talking about inflation, and people think, oh, copper went up, steel went up, lumber went up. Of course, it's corrected. Food commodities have gone up, and all of this is true. We must be in an inflationary period. And of course, people will argue and say Bitcoin has taken a lot of the thunder out of gold. But the truth of the matter is now we've got the Basel III starting on Monday as well, which means paper gold is not even considered real gold. You have to have physical gold, which is already in shortage. And if, and I'm not saying this will happen, but if we really do go into a super inflationary cycle, then gold, just think about this. Gold, if it's just going to catch up to where the Dow is now, could be at 15,000. So I just throw that out there because sometimes when you make these outrageous claims, they may or may not come true, but at least it gets people to pay attention to the possibility. So the complacency that we're seeing in the metals and the precious metals right now could either mean that I'm totally wrong and this inflation is transitory and bravo Fed for being right, or it could mean that we're onto something and things are going to get more out of control and spiral out of control in terms of inflation. And we'll really see that reflected in both the gold and silver. That's my spiel for the day.
Okay.
So,
all right. Okay. Was this enough of a pullback to begin reaccumulating?
We were already in. I think so. I mean, I tweeted out last week that I thought silver bottomed out. It tried to take out the lows on Monday, couldn't stay there, immediately reversed, and I believe it's coming in higher. It's coming in higher. And that's with the dollar rising.
Good point.
And the good news that we just got, right, that jobless claims were less than what they expected. They expected, I think it was 390 and it was 364, which is giving a little bit of a boost here to the industrial market, but not really doing so well here. Now the TLTs have come off a little bit because good news means the yields don't have to stay this low.
Maybe some book squaring in front of the NFP.
That too, and long weekend and summer doldrums, as you talked about. But let's switch because I really think it's important to look at the Modern Family because people are saying to me, how reliable is the Modern Family? And my answer to them is super reliable. It's never steered me wrong. So let's start here since we'll go in order. So if we stop here at the top left, this is retail. Of course, Granny of the Modern Family. Those of you who have no idea what I'm talking about, I created this Modern Family mostly for myself to really keep track of macroeconomics using what I consider to be the most important index for the US economy, which is the Russell 2000, because that's all US-based companies, manufacturing and industrials. Retail, because obviously we are a consumer economy and it's 70% of the gross domestic product. And then I added computer chips through semiconductors, transportation, which obviously is super important in terms of seeing how goods are moving in the country, regional banks, not big banks, and biotechnology. And I felt this was a really good rounding out. And I'm not going to get into the explanations of cyclical versus non-cyclicals, but this has been super reliable. In the beginning of 2020, NASDAQ was making new highs, S&P 500 was making new highs, and the regional banks were floundering. Transportation was trying to make new highs. It couldn't. The Russell 2000 tried to make new highs. It couldn't. And now here we have
it still can't.
It still can't. So here we are in a very similar situation right here with all of the euphoria that we're seeing and that move that we've seen recently back into mega cap and growth stocks and technology and chip stocks. This is healthy and could go on for a while. Semiconductors could lead the family higher. If you look at it here, now that it's taken out 260, it could go to 300. It could lead the family higher for a while. But generally, what we start to see is either the transportation. If you look at this weekly chart in transportation, not only is it weak, it's a potential bear flag, which means that if we break down next week under this week's lows, we could see another $40 drop in the transportation sector. That's not going to be good. And that's why I'm thinking the stagflation. If we look at the banking sector, of course, it likes the rates being higher. And you can see that this is also, but this was floundering right before COVID happened. And I'm not really sure why regional banks would have been weak, except I'm thinking that people were obviously already starting
risk.
Default risk. And also there was not only default risk, but also if you're looking at what people were doing at the beginning of last year, GDP wasn't moving that much. It wasn't like there was robust housing at that point or robust growth in businesses or job growth. It was good job growth, but it kind of had stagnated. And then retail right here, you can see is trying to get to the new highs, and we'll see if it can get back up to these highs and take it out. And here's back to the Russell, which again is near all-time high, which happened right here in March, but not quite there yet, 234.15. So you put this all together, and biotech, by the way, which was the first one to show us that we were bottoming in March, April of 2020, makes sense because of obviously COVID. There was a lot of research and money being thrown to the pharmaceutical companies for a vaccine. But you put this all together, and what do you see? You see almost a repeat of not just last year, but I could tell you so many times where we were near, whether it was a month off, 2 months or less, a market top is in this scenario when we see this divergence between particularly the inside sectors of the market and then the mega cap and the growth stocks, because ultimately they cannot support the US economy. Yes, we're chip technology and people do go out and buy their new iPhones, and they're obviously during the COVID, Amazon performed well and all the tech stocks performed well, fell off and now come back. But we need to see what happens here with IYT and KRE and IWM and XRT. And
the old economy.
Exactly. If they can get dragged up, super. If they just stay at a level, okay. But if they start to falter, then I would really start to be not only cautious, but it also may give a clue as to why we're seeing that buying that was going into TLTs, that the surge in jobless claims for the better is good because we're in summer, in fall, in the September, the unemployment benefits stop. Maybe we'll see a little bit more in the surge in the jobs growth. But what's going to create jobs after that? And that's kind of what I think the market is telling us here, particularly in the transportation.
Do you see any regulatory antitrust risk in the FANGs and, in the Facebooks and the Amazons, and it's a different administration, and Gensler is head of the SEC, and FINRA came out with the biggest fine for a broker dealer in the history with Robinhood. Do you think if anyone could screw up a bull market, that it could be our government?
Well, certainly the government is capable of doing anything, obviously, here. But again, let's go back to the antitrust. There has been talk of antitrust investigation and some kind of action for
a long
years.
time.
Yeah, and nothing's happened. So I don't worry about something until there's something to worry about.
I see.
And as far as Gary Gensler goes, he's got so much on his plate. I mean, he has promised to look into short selling, naked selling. He's promised to look into order flow in terms of commission-free companies that then sell their order flow to dark pools and things like that, into a high frequency trading. He's promised to look into crypto. He's promised to look into meme stocks. And now he's promising to look into antitrust. Meanwhile, the guy is a Goldman Sachs guy. I mean, I don't know. I'm not sure yet about him, whose side he's on. And the fact that he's going to go after Robinhood, even though Robinhood has definitely done some questionable things, it still attacks the retail investor. And that's what usually happens, is under these investigations that happen, the rules for the mega wealthy do not change. The rules for the regular guy changes.
Oh, they're trying to protect the regular guy.
Oh, yeah. With more regulation. And we know what happens with more regulation.
We have to protect us.
Exactly, because we're getting too smart, so we'll do something wrong. So let's protect them so they can't
protect them from being victorious in the short squeeze.
I mean, really. And what's so great about 2021 is that you've got this whole generation of people who get this and are being very vocal about it. It's sort of an interesting underpinning revolution that's happening here. Like, in our generation, it was, the man versus the people versus the man. Now the people versus the man is more in the financial area, which I think is incredible. But anyway.
And you and I were always taught to fade retail, right? They were
yes,
the last.
right. The public is stupid, right, exactly. But the public is, listen, I'm sure there are going to be plenty of people when the picture changes that are going to be caught by surprise. Yeah. But I also think that this whole meme stock trading is very spontaneous, disorganized. There's no great master plan here. And so if they try to do something to regulate and make that harder, it's going to hurt the whole market, definitely. And so that's what's going on. Anyway, so just to sum up, so I'm watching for a few things. Obviously, I'm watching the dollar. I heard you talk about the dollar. I think the dollar now, if it breaks, if we're looking at DXY, if it breaks down under 92, that could be a little bit of trouble. It's been trying to pop up here.
Are you surprised that it turned before making a new low under 89.20?
No, I'm not, because the momentum was shifting to the positive. So it was showing that the momentum was shifting. You had dollar swaps. When we had that big move down a couple of weeks ago, the Fed came in at the same time they were doing all the jawboning. They actually did dollar swaps, which is a Fed policy where they allow people to swap dollars for debt in foreign countries. That supported the dollar. As I heard,
I didn't know that.
Yeah, as I heard you mention earlier, maybe if we get a good, strong jobs number tomorrow, you'll see some money going into the dollar. But just because the dollar worked off some oversold conditions doesn't mean that I'm necessarily bullish in the dollar. I'm just not ready to get bearish again. But I do believe that the dollar longer term has real issues between digital currency and cryptocurrency.
Yeah,
so,
I see you're covering crypto much more. Recently, I've seen some of your stuff, and gosh, your coverage. I hope you're still getting to get some rest every day with everything that you're covering.
Today is particularly insane because when I get off with you guys, I'm doing Cheddar Opening Bell, then I'm doing Cavuto, Fox Business, and then I've got Boom Bust I do every week with Russian TV of all things. It's good. It's good. This is a good type of exhaustion because it means that people want to hear from an experienced trader, and these networks have me on constantly because I have a perspective that's different than economists or people who work for large banks and corporations who may run major hedge funds and can't really even talk as freely as they would like, perhaps. I have no gumption about being totally honest, forthright, and because I have real trading experience or what they call push the button, all of a sudden I've been in high demand. So I'm good with that. I'm good.
All right. One of our viewers is asking, can you explain swapping dollars for debt quickly, Michelle?
Well, basically, because we are the largest holder of our own debt here in the United States, but other countries, foreign countries, also hold U.S. debt. And so what happens in a situation where the Fed might come in, and they did this during the pandemic too, is they allow foreign countries to swap their dollars for debt. So basically that's the skinny on it. Do I know every single nuance of it? Yeah. No, I mean, I'm not going to profess to be some kind of an expert in dollar swaps, but I do know that it's something that the Fed can use to manipulate the price of the dollar and also to help foreign countries with their U.S. debt.
Okay.
That's about as far as my knowledge goes. I hope that's helpful.
And as far as yields, I'm having a tough time getting a handle on it. U.S. dollar yen, it's been sharply higher, almost looks like a breakout. To me, that would imply higher yields, even though it's a very mixed picture on the 10-year. Are you leaning that way?
Yeah, well, I think the yield curve has started to come in again, right? Let me just put up the TLT here for a second. So yeah, I mean, what's interesting about the TLT is it was the same kind of thing. In fact, if you look at this chart right here, this is the monthly chart. And the monthly chart, this 80-month moving average, and I'm going to show you it in junk. We broke down under it briefly in 2018. And then at the end of 2018, if you recall, there was an announcement that they might taper, and then the market went, taper tantrum. Right. And then the Fed said, oh, no, never mind. And since then, obviously, you can see we had the big collapse of the bonds after all the stimulus. But now it never broke this level right here. So the fact that it's bouncing to me is probably okay, but can it get through 150? Probably not. That's what I'm looking at. So yeah. And then if we look at the junk bonds, this to me is the most interesting.
Yeah, HYG.
And I don't know, it's coming in. It looks like it's going to come in lower because it's 920 bid at 969. Which means we could be leaving maybe a little bit of a top here. And this is so important to watch because this is going to tell you, forget about what the Fed says.
Yeah.
My best tip today, really, if you're really interested in knowing what the Fed does, is watch these. And you can watch HYG, same kind of thing. I just happen to like JNK for some reason, I guess because it's so literal, junk. But you can see it made a new high here, a new multi-year high. And at the same time, this 80-month moving average, I'm going to blow this up. This has been trading underneath it, if we can kind of project, since 2013, 2014. And we broke out of it in recent months. So this is really where you're seeing what I like to call the Fed folly. However, we did have a little bit of a higher move for 110.33 back in January, right before the big dump. So we had a big move up in junk bonds as the market was going up, and then boom, COVID happened, and that was the end of that.
Will this really lead or follow any kind of significant or intermediate?
To me, this is a leader.
Top leader.
It's a secret leader. It's a secret leader. Most people don't even think about it, let alone. But I was last year was looking at this going, wait, what's wrong? This just made a new high and now it's starting to tank. And I remember very clearly saying that if this broke a certain level, I don't remember what it was, but that it was time to be cautious. And now here we are again, mirror image. We made a new certainly yearly high, and certainly over the last few months. Yeah, look, we haven't been there in a while. And now we're coming in lower. We got a decent jobless claims situation. And also the inflation narrative hasn't really gone away. So here you go. Keep your eye here. If this thing actually looks like it's going to have some kind of a sharp reversal, then that would also make me cautious, because that would mean the end also for the growth stocks. I mean, they're enjoying the low yields right now.
Exactly. All right. Well, Michelle, another great interview, and you keep getting better and better. And, I really appreciate your generous spirit by giving us time and edifying our community. Best way for people to follow you and get involved with you, you want to show your site, and I know your Twitter handle is @MarketMinute, and
let me show. Oh, I think I just completely, Let me see if I can get into
You could do a new share.
I'm going to do a new share, but first let me get to the right screen. Hold on.
Okay. What's the weather like there today in Santa Fe?
Well, we've had this incredible amount
wave?
of, no, we had a heat wave and then we had a tremendous amount of rain.
Oh,
So that's, and now, so that's really cooled things down.
nice.
So let me see if I can show you. So here is our market gauge site. And I'm going to go back here and share the screen so you can see it.
Okay.
Here we go. Here's my market gauge site. There's me. There's my book, Plant Your Money Tree. We do have every week, we do a lot of writing. There's a daily blog and then a weekly one that Keith does. We now added a whole crypto section. And then also, if you want to find me on Twitter, that's at Market Minute. That's probably where I'm the most active.
Yeah, and you are. And
Yes.
yes, and Paul's saying that he loves the RSI 3 settings.
Oh, yes, yes, yes. We can talk about that next time.
Okay, we will. And that's a great segue for saying thank you, my trading warrior sister, for being here today. Congratulations on the growth at your company, and you and your whole crew and your husband and all the people that listen to you. And it does, I talk to people and they'll say Mish said this and Mish said that, and a lot of respect from here and in the FinTwit community. Michelle, thank you very much.
Thank you. I've worked hard to earn that respect, so I appreciate that.
You deserve it. You deserve it. Go ahead.
Well, I was just going to say thank you, Dale, because you and I have been friends for a long time now.
Yeah, I appreciate what the wisdom that you have. The Bible calls wisdom she.
Yeah, well, I'm not surprised.
All right. Thank you, Michelle.
On that note.
Yeah, good hunting. There's a confident woman who's not surprised that wisdom comes from our wives and the women in our lives. So keep that in mind, and thank you, Michelle.
Okay. You take care. Thank you, everybody. Bye-bye.
All right. Remember, everyone, that's a wrap. Don't just count your pips, count your blessings. We'll see everyone for the NFP Live tomorrow. And thank you again, Michelle Schneider. Adios.